Good evening, Gr12s. I hope that I find you well and that everything is good on your side. Ma'am Helen, can you just confirm if I'm audible enough?
Yes, sir, you are audible. But
Thank
for
you so
me,
much.
it was a little bit soft. I just put up my volume a little bit.
Okay, thank you. Thank you, ma'am. All right, Gr12s, good evening and welcome to our class. My name is Mr. Simbi and I am happy to have you in today's class. This session is strictly designed to help you so that we can get to prepare for the June exam, paper 1. We are aware that next week, Friday, we are writing our paper 1. Next week, Friday, we are writing our paper 1. So I would have loved so much that you can be able to stop me and ask me questions here. But from previous history, I've had challenges where the meeting can end up being disrupted and things like that. So what I will do is I will explain something, then I'll give you a chance to ask me questions. If you need to ask me questions, do not hesitate to send a text message. You can send a text message and then I can read your message. Please do not send a voice note, but you can text. You can take a picture of the area that I was explaining, and then you can send me a text message. You can send the text message to 070 750 4605. So if you have a question, you can take a picture and then you can send it to me then. When you do that, please do indicate your name. Hi, Mr. Simbi. My name is Andiswa. Can you explain this? So that when I explain it, I do mention your name as well. It's 070 750 4605. I want the session to be as engaging as possible. But in order for us to do that, we are going to do it via WhatsApp. So I have my WhatsApp here. It's open. I'm waiting for your questions. As soon as you have a question, you send it through, and then I can repeat whatever area that you need me to explain. So, what are we to expect on Friday? On Friday, the paper is normally structured in the following areas, which I'm going to show you. Your paper can be structured in the different ways which we are about to explore. Your paper 1, the structure of paper 1, there is about 4 ways in which an examiner can test this paper. And you will see that your question 2, your question 3, and your question 4 will remain constant. But what changes is question 1. Question 1 is the one that will change. And there's about 4 different options that an examiner can explore. And I will also show you when we are doing the question that we are going to do, which option was exploited by the examiner. So option number 1, it is where you have your statement of comprehensive income and the statement of financial position. So this is a combination of your statement of comprehensive income together with the statement of financial position. But I have seen at times that some areas can be blocked off, shaded, both of the statement of comprehensive income and the statement of financial position. Your cash flow statement analysis and corporate governance and auditing normally would remain constant like that. But number 1 would become the one that an examiner can play around with. And then in today's session, we hope to cover question 1 and question 2. Time permitting, we'll cover question 1 and question 2. Question 1 is structured in 4 different ways, as I've said. And the most recent papers are testing both statements for question 1. So this has been the trend in the most recent papers where both are being tested. That is the statement of comprehensive income and the statement of financial position. And it is advisable to handle the transactions that are affecting both statements simultaneously. You cannot do one and not completing the other. You'll be disadvantaging yourself. And we'll see tonight how best we can do that as well. Option number 2. Option number 2. Yes, option number 2. You can see that question 2, question 3, question 4 have remained constant. But what has changed is your statement of comprehensive income. Remember, it was statement of comprehensive income plus statement of financial position earlier on. But in this question, it is strictly the statement of comprehensive income and notes. So several notes can be tested in this particular area, and the examiner can explore all the notes that can relate to the statement of financial position. All right, so this is option number 2 that we have at our disposal. Let's see option number 3. Here is option number 3. Option number 3 is, remember, question 2, question 3, and question 4 have remained constant. But what has changed is the statement of financial position now. So here you have the statement of financial position and notes. This is the question that we're going to do tonight. All right. But you have to know that the examiner has in the past been exploiting this one. In most recent papers, this is what the examiner has been testing. But for tonight, we are going to focus on the statement of financial position and notes. And then question 2, 3, and 4 have remained constant. Then the next one is question 4, option 4. With option 4, you now have question 2, question 3, question 4 remaining constant once more. But what has changed is the calculation of the correct net profit after tax and the statement of financial position, whereby it can be tested as a full statement of financial position, or the examiner can test the equity or the assets section, depending on what the examiner wishes to test. But you can see in this trend that 1, 2, 3 have remained constant. That has been the trend in the past. That has been the trend in the past. Okay. So now what we're going to do, we are now going to go to our paper, and we want to see which question we can focus on. Which question can we focus on? Okay, now you must have received the worksheet. If you have received the worksheet, that will make work easy. But if you have not yet received it, you can still text me on that number. If you have not yet received the worksheet, you can text me on the number that I gave you earlier on. If you need the worksheet, it is 070 750 4605. Once again, when you speak, be polite. Hi, Mr. Simbi, may you kindly share the question paper, and I'll do that. All right. So let us see if there are people that need the question paper before I can begin. If there are people that need the question paper so that I can send it to you. Okay, I'm seeing a couple of messages. Yes, I see your messages. I see your messages. I see your messages. Let's see if I can just send them to you. I see your messages. I see your messages. Okay, beautiful. I see your messages. Okay. I think for me to do that, because I can see there's quite a number of you, I'm going to be able to share the worksheet so that it becomes effective. I am going to be able to send the worksheet so that it becomes effective. Okay. Okay. Let me do that. And I am going to make it easy for all you guys that are sending me messages so that you can get the worksheet. It's not a problem. It is not a problem. Just give me exactly a minute. And then all of you have the link, the worksheet now. Okay. Okay, so what I've done so that it becomes easy, I'm going to give you a link right now. You just join that group. Once you join the group, and then you, so that I can just send the
link.
Yeah, once, otherwise it's going to take us.
Excuse me, sir.
Yes, ma'am.
Are we doing November paper 1? Like I
Yes.
said.
Yes.
No, I asked the teachers to share with them. Just ask them if they haven't received it.
Yes,
I did send and communicated them as made copies for them of that question 1 and 2.
Yes, I have quite a number of kids. Maybe they did not go to school because today others were writing tourism. So it could be those kids that don't do tourism. So they might not have been at school. So they might not have received the worksheet. But it's good. I'll be able to send the worksheet to them easily.
Okay, now it's
Yeah.
fine. Noted, meneer.
Okay. Okay. All right. So what I've done is all right, if you join that WhatsApp group, I'm just going to send it once. Otherwise, me having to send it to you individually, it's going to take the entire lesson. Okay. Okay, I still have quite a few other kids that are texting. Okay. Thank you, guys. Your messages are kind. No one has said as yet, Ewen, send me the question paper. You are kind. Thank you for being kind. Hi, Mr. Simbi. My name is Raisa. Kindly join there, Raisa, so that I can be able to send it to you much easier. It makes it easy. So we are working on the NSC November Paper 1 2025. Okay, Jessica, I've just responded to you. Sorry, guys, that is going to take just a bit more time, but it's better that we get it and then we can be able to move nicely. Okay. I think we're almost there. Okay, I've just responded to you, Zalika. Okay. All right. Fense, I've just responded to you now. Okay. Right. Okay. I think everyone must be sorted now. Beautiful. Okay. So here's the worksheet. And everyone must have received it now. Beautiful. All right. So, okay. Okay. There was one more guy left. Okay. One more guy left. And then now I'm going to go to my worksheet. I'm going to go now to my worksheet. Pindile, I see your hand. I'm now going to go to my worksheet and we're going to begin now. I'm going to go to my worksheet and we are going to begin. Okay. All right. I'm going to share my screen. Okay. We can begin now. Ma'am Ellen, can you confirm if you can see my screen? Okay. We're going to move now. Okay. I think everyone is sorted. So I'm just going to resend it again. Just going to resend it again. There it is. So we're going to begin with question number 1. We're going to begin with question number 1. And question 1 reads, company financial statements. So remember, I have been instructed to help you with this particular question, but it is wise that when you prepare in the way that I've been talking about earlier on, that you prepare your statement of comprehensive income together with a statement of financial position, as that will give you the advantage when an exam is set. So we had several options that we explored earlier on, but it is an advantage if you can be able to do that option that I mentioned, both the statement of comprehensive income and the statement of financial position, it would be very, very much of an advantage. All right. So in this question, I'm going to be reading it slowly so that it can be beneficial. So I'm not going to be rushed. I'm going to take time. And once again, please do ask me questions so that I can be able to respond and explain a few things that you need clarity on. That is the main aim of this session, to explain the areas that you need me to explain nice and slowly. It reads, the following information was taken from the accounting records of Violet Traders. All right. So here we're dealing with Violet Limited. The financial year ended 28 February 2025. The company trades with women's and men's clothing. So I've read the first part and I've understood it. I'm going to go now to 1.1. Refer to information B. Calculate the correct value of the closing stock of men's informal shirts. 6 marks. 1.2. Prepare the ordinary share capital note. 8 marks. That is another question. And then the next one then says, all right, the next one then says, prepare the statement of financial position on 28 February. Note, show all workings in brackets. Second point, certain figures are provided in the answer book. Then, missing amounts in shaded areas must not be filled in. Once it is shaded like this, do not fill in. That's what it means. Okay. Now, it is of great importance to know that whatever you are being tested here is related. It is related. It speaks to each other. So, you must be able to read your information in the 10 minutes reading time and then know where you are coming from. All right. So I hope you have a pen, a pencil, a calculator, and somewhere to write as we are going to start writing now. And we begin. Information A has the following amounts extracted from the accounting records. 2024, 2025. Okay, if you can hear the sound at the back, that's one of my dogs. His name is Caesar. It's feeding time, so he's trying to tell me, come feed me. Unfortunately, he's going to eat later tonight. All right. And then the fixed deposit is a question mark. We don't have the fixed deposit here. And then we are given trading stock. That means I'm going to come down here onto my statement of financial position. You must know your format. You must know your format. It has to be in your fingertips. It has to be something that you can do with your eyes closed. Format. You must know your format. Now, if I am given trading stock here, I must be able to go and open my bracket. I come to my statement of financial position, and I'm going to say on the first one, inventory. Inventory. I open my bracket. In my inventories, write them as inventories. My inventories is 4 million. So I'm opening my bracket here. I have my 4,598,000. the opening of bracket has to be done. The opening of bracket must always be done. The next one is my debtors control. As you can see here, trade and other receivables, and the amount was given, 735,000. The next one is provision for bad debts, and I now have ordinary shareholders' equity. And what I am given here is my ordinary share capital. I remember that in the question, I have been required to open ordinary share capital note. This is your note number 7. So I will come here then and I will say, how much is my ordinary share capital at the beginning? It is 11 million. So I know this will be my beginning. So I don't know the number of shares here, but I know that this is going to be shares in issue, shares in issue at the beginning, at the beginning. And at the beginning, it is 11,395,000. 11,395,000, which I got here. And then I have my balance at the end, which is 17 million, which is over there. So this is going to be my shares in issue at the end of the year, 17,875,000. These amounts were given. And I know that if I am given this one, this must also go to my statement of financial position. So it means I can come further down and I can say, on my shareholders' equity, I know it is made up of 2 things. All right. Remember here, fixed assets is going to be note number 3, inventory number 4, trade and other receivables number 5, cash and cash equivalents number 6. Then I come to my shareholders' equity. And then the first one is going to be my ordinary share capital, which is note number 7. And then my retained income, note number 8. So I'm going to come here and I'm going to say now, this becomes my ordinary. This becomes my ordinary share capital. And I have been given the closing balance here, which is 17,875,000. That means I can bring it here, 17,875,000. 17,875,000. I know that I still need my retained income over here. I still need my retained income. I don't know it yet. Let us go and we will see. I don't know it yet. So you will see that in this question, it came with note number 7. The examiner could have brought it with note number 8. All these are possibilities in an exam. Okay, so retained income, I was given the amount at the beginning, which is the 4,805,000. Should I bring it here under the retained income? Certainly not, because we will need the retained income in 2025, the one with the question mark. So it's going to remain blank for now. Let's go on. So I'm taking all this information that is here and I'm bringing it to my answer book. So the next one is my mortgage loan. So I'm going to come and I'm going to say non-current liabilities. It is my loan. I open my bracket. My loan is 3.2 million. There will be adjustments, and we'll attend to those adjustments as we go. So I've taken this amount here. Creditors control. This speaks now to my trade and other payables, which you see over here. Bank overdraft. There is a question mark. So we need to get that one as well. All right. So let's go. We're going to go on to the next information. We're going to go on to the next information. All right. So if your video is freezing, you need to move around the house and find a spot where you can get better signal. If it is freezing on your side, you need to move around the house and get to a spot where you can get better signal. Okay, we're going to continue. And then the next information is information B. We keep in mind that we had a question which was 1.1, and 1.1 said calculate the correct value of the closing stock of men's formal shirts. That's 1.1. Okay, so let us read this one together. I'm listening now. Here we go. The information reads, it was discovered that the closing stock of one specific brand of men's formal shirts was valued according to the first in, first out method instead of the weighted average stock valuation method. This must be corrected. Now, you will find that in many papers, you can find inventory valuation questions in your question one, that is in your paper one. So there are topics that can be found in both paper one as well as paper two. And inventory valuation is one of the topics that you can find in paper one as well as in paper two. So this kind of an adjustment is very familiar. I have seen one similar to this, but that one was saying some stock was omitted. That one was saying some stock was omitted. In other words, there was some stock amounts that were not recorded. But in this one, they are saying that the shirts were valued according to first in, first out, instead of the weighted average method. So we are going to come now to our 1.1, and we see how can we do this calculation. All right. I have received a message that there's some kids who have hands up. And if your hand up is a question, thank you so much, Mr. Menzi. I see that there is a hand that is up. And if you have a question, because the mics have been disabled for security reasons, if you do have a question, please do send a message on WhatsApp, or if you have something that you need to bring to my attention, please do send me a WhatsApp message, and you can send me the WhatsApp message on my number, which is, I will give you the number now, don't know it by head as yet, I had to replace it, 070 750 4605. Please, for questions, please text me on this number on WhatsApp, and then I can be able to answer your questions if it has to do with some questions that have a relationship with the presentation. So please do send me a WhatsApp message. I can see there are some hands up, but if you have been attended to, kindly put your hands down so that we can know that maybe your queries have been attended to. Okay. And then we're going to go. We're going to go. So it was discovered that the closing stock of one specific brand of men's formal shirts was valid according to first in, first out instead of the weighted. So the weighted is the correct method. The weighted is the correct method. However, they used the first in, first out. So what do? We are aware, all right, that the stock that they're talking about has a value of 285,500. So this is the value of the closing stock according to first in, first out. And this amount is incorrect because they used the first in, first out instead of the weighted average. What do? Let's calculate the amount that must be there. I would then bring my calculation here like this. And then you would remember that whenever we are doing the weighted average, I will have my rands at the top and my units at the bottom. This applies even if the question was going to come in paper 2. Rands over units, rands over units. And then I would begin and I would say. So it would take the similar approach of calculating cost of sales. Remember the periodic inventory system way. How do I say it? I'm going to say my opening stock. So I'm going to come here. My rands is at the top. My opening stock in rands is 97.5. So I'll come here, then I'll say 97.5 opening stock. And my units is 300. 97.5, and then here's 300. That's my opening stock. And then I'll say plus opening stock plus. I'll then come and add my purchases. Here is my purchases. So I'll come then I'll say plus 1,605,000. 1,605,000. And the units is 4,800, like that. And then I know I must subtract my returns minus 42,500, like that. And the units I must subtract are 100, like that. So let's see if we can break this down and see what we get. Let's bring in my adding machine. So I'm going to say 97.5 plus 1,605,000 minus 42,500. That will give me 1,660,000. So I'll come here and then I'll get my 1,660,000. And I divide this now by my units there. And the units are 300 plus 4.8 minus 100. And it will give me 5,000 units. I then divide this. So I'm coming to say 1,660,000. I divide that by 5,000. That will give me an average price per unit. An average price per unit of 332. This is my average price per unit. And we know that the units that we had were 820. So I multiply that by 820. I'll come here and I'll now say, multiply by 820. Multiply by 820. And that's going to give me 272, 240. So I end up with 272, 240. So I've answered this question, which gives me 6 marks here. But at the back of my mind, I must remember that there was an error that was committed, because the value of inventory that they recorded was 285, 500. Yet it was supposed to be 272, 240. In other words, the inventory amount that we have has been overstated. It has been overstated. What do you mean? The inventory amount should have been 272, 240. However, the inventory amount that was calculated was 285, 500. That means the inventory amount that we have in our records is more, which is the 285, 500. It should not have been 285, 500. It should have been 272, 240. Now, by how much was it recorded more by? So we now say 285, 500 minus 272, 240. We get the difference. Then we realize that our inventory amount was overstated by 13,260. So we then come now to our inventory in the statement of financial position. And we say, we should not have recorded the 285. No, we should have recorded the 272, 240. What do? This amount is overstated. How can you correct it? Go and take out the difference. How much is that difference? Remember, we calculated it. 13,260. So I come here, then I say minus 13,260. That becomes the first thing to do. Okay, so here what I am doing is I am relating, I'm moving with my information. You can see I never started this question by answering 1.1. No, I did not do that. I am focusing on my information. I began to deal with information A. After dealing with information A, I came to B. And after B, I'm going to go to C. As I am doing that, my questions are getting answered on their own, bit by bit. It's like a puzzle. It's like a piece of art. You just put the brush onto the canvas and then magic begins to happen. So you don't have to say, let me answer 1.1, let me answer 1.2. No. You never finish the exam if you follow that strategy. You need to see the order in which the examiner has brought the information, and you attack the information one by one, and then the rest will do itself. Information B has been done, and information B has answered 1.1, and information B has also spoken to our inventory. It has spoken to our inventory, where we came and we subtracted 13,260. Mr. Simbi, that looks like an 8. Write it neatly, please. 13. Yeah. Okay, let me write it neatly for the last time. If it doesn't, then 13,260. 13,260. It doesn't look like an 8 anymore. It does look like a 3. Of course, it's a 3. Information C. Here we go. Information C. it reads fixed deposit time bank. So in terms of information B, you have to expose yourself to different types of adjustments that have to do with inventory. It can be that the inventory was omitted, like I said earlier on, or it could be that the inventory, in this case, it was incorrectly calculated. So you still have to do all these kind of things and see how best you can answer the questions. It is very much doable. Very, very much doable. Practice makes perfect. The warmer the bed, the colder the future. Hours of practice are critical. Accounting has to stay in your fingertips. Let's read information C. Fixed deposit from time bank. Let's go. It says, a fixed deposit of 320,000 matured on 31 July 2025. Okay, so our statement of financial position is on 28 February 2025. It began on the 1st of March 2024 because it is ending on the 28th of February 2025. This will give us 12 months here. Now, a fixed deposit of 320,000 matured on 31 July 2025. Normally, in past paper English, it would have said a fixed deposit of 320 will mature because this is in the future. 31 July 2025 is in the future because we are on 28 February 2025. That is my simple English. So it should have read, if I'm to read English properly, a fixed deposit of 320 will mature on 31 July. Now, we understand very well that when we talk about non-current assets, these are assets that have a lifespan of 12 months and more. They will live for 12 months and more. And then your current assets, these would be your 12 months and less. So you will see the same relationship playing out with your liabilities. Where you have non-current liabilities, these will be there for 12 months and more. Yet your current liabilities is 12 months and less. The principle that the examiner will test in these two places is your ability to tell that if an amount is currently a non-current, either an asset or a liability, if its form is going to change within 12 months, you should be able to convert it and show it from the non-current and present it under the current. We'll do it with a fixed deposit. We'll do it again with the loan. This is a popular adjustment with examiner, popular adjustment with examiners. Let's go and see. So a fixed deposit of 320 matured. But like I said, I would have said will mature. But again, there's another part here that says will mature. So I guess that was the reason why. A fixed deposit of 320 will mature on 31 July 2025. That is 320. The remaining 60% of the fixed deposit will mature on 31 December. So it tells me, therefore, that my fixed deposit, it could be 2, it could be 3, it could be 4. The fixed deposits are 100%. In terms of friends, we don't know as yet. but a part of it will mature. In terms of percentages, we don't know, but we've been given the rand value, which is 320,000 rands. And then the remaining now, we are told it is 60%. In terms of rands, we also don't know. We can play it around, whichever way you want. We understand that in accounting, if it comes to this, it is simply what you want over what you have times what you have will give you what you want. But you have to be able to group the like terms. It has to be a percentage over a percentage times a rand so that it gives you a rand. So in simple words, we can say, we want to know how much was the fixed deposit before this 320 would mature. So we want the full fixed deposit, that is 100. What do we have? We know that if a percentage is maturing and the remaining is 60, whatever is maturing, therefore, would be 40%. So what we have is 40, and that 40 has the rand value of 320,000 rands there. And then let's see how much that will give us. Come here, my friend. So we want 100, which is the full fixed deposit. We have the 40, which is the 320,000. It would therefore tell us that the fixed deposit before it matures is 800,000. This is 800,000. So I can come now to my fixed assets here, and I can say, safely so, fixed deposit, open my bracket. My fixed deposit before anything matures is 800,000. So I'll come here and then I'll say 800,000. And we are told now 320,000 will mature. So I'll come here, then I'll say minus 320,000. We've been taught since grade 10 and 11 that this would therefore be shown under your cash and cash equivalents here. But in this question, it is shaded, so you can't bring it there because it is shaded. It is shaded. Okay. It is shaded. All right. I'm going to continue. I'm getting a few questions. I'm going to round up this one, then I'll answer some of your questions. All right. So what we saw here is a fixed deposit, and the fixed deposit was 800,000. 320 will mature. That would therefore tell me that if I close my bracket here, I'm now saying 800 minus the 320. It will be 480,000. So here I'm going to end up with 480,000 there. 480,000. Okay. Let me see if I can answer one or two questions that you guys are sending me. This little phone is one of those cheap phones. Say, does the 320 not stay in the fixed deposit because it only matures in the next financial year? Okay, so that is the first question. Say, can I also say 320 times 60 over 40? But why do we minus 320? It is going to mature in the next year, not this year. Okay. First, let me address the one that you spoke about, which talks to another way of doing it. Because what we want here is the 60 that remains. So you gave me another option of saying you could have said 60 over, and what you have is the 40, 60 over 40, and then you multiply that by the 320,000. It's simply, again, what you want over what you have, because what remains here is the 480. So when we are dealing with fixed deposits, our financial year, this particular financial year, begins on the 1st of March 2024, and it ends on the 28th of February 2025. This is our financial year here. If we have an investment which will mature in the next financial year, that means within the next 12 months here, that investment that is going to mature in the next financial year, it will cease to be a non-current asset, because within the next 12 months, it will be converted to cash, and cash is a current asset. So you will see here in this particular question, we were told that it is going to be on the 31st of July. So we're just going to say from March, April, May, June, July. So it's not even 12 months. It's within 1, 2, 3, 4, 5. Within the next 5 months, this particular investment will mature. So if it is going to mature within the next 5 months, it is no longer a non-current, because a non-current has to be 12 months and more. But this is only 5 months. So we need to bring it now to our current assets. We bring it to our current assets. And the same scenario is going to play out when we go to our fixed deposit. So I think I answered 2 questions there. That pertain to that. Okay. All right. And here they say the remaining 60% will mature on 31 December, and the key is 2028. So we are in 2025. And if they are talking about 2028, that's about 26, 27, 28. That's 3 years. So it's more than 12 months. So the 60% will remain. The 60% will remain. And the 40% will mature or has matured. Then we bring it to the cash and cash equivalents. If it will mature or if it has matured, we bring it to the cash and cash equivalents. From the past exam papers, the many of them, they indicate it will mature. Okay. So this was one of them. And then I'm going to go now to the next one, which is information D. Information D. Information D reads, transfer of balance and provision for bad debts. With these particular adjustments, you need to open what we call T accounts. I would highly recommend that you open ledger accounts, open T accounts with these type of questions, open ledger accounts, open T accounts with these type of questions. So let's do it together. I'm just going to create some space here. I'm just going to create a bit of space. Just going to create a bit of space. Here we go. Okay. A debtor who has overpaid his account in the debtor's ledger. We understand that when we have a debtor's ledger, this is my debtor's ledger. On the debit side, it is a plus. On the credit side, it is a minus in the debtor's ledger. So, if we sell goods to a debtor, we are going to record the invoice here. We sell goods. If we sell goods, it comes here. So let me I'm going to give you figures out of my head. I'm going to give you figures out of my head. Please don't ask me, Mr. Simbi, where did you get that 20,000? From my head. So we have sold goods to a debtor for 20,000. Please don't ask me where I'm getting the 20,000 from. It's not in the question. It's from my head. So we have sold goods to a debtor for 20,000. This is DJ. And that debtor now comes to pay us. And that debtor pays us and says CRJ 25,000. That debtor has paid us 25,000. What has happened is this debtor was not supposed to pay us 25. They were supposed to pay us 20, but they paid us 25. So it tells us in this case that they've overpaid. They have overpaid by 5,000. Here the examiner is just playing around because in the past we have seen adjustments like these. Because adjustments like these have come to us and we would know that here's 25, here it is 25, and then you're going to get a balance carried down, which is 5,000, and then you're going to have a balance brought down, which is 5,000. In the past, we've seen these transactions written in this way: a debtor with a credit balance of 5,000. This is what the examiner has been saying in the past years. A debtor with a credit balance of 5,000. It's the same as what is said here. A debtor who has overpaid. When they overpay, they now have a credit balance. Remember, your debtor is an asset, therefore it must have a debit balance. But if your debtor now has a credit balance, it is no longer a debtor, because now we owe them. We owe them. He has overpaid his account by 5,000 in the debtor's ledger. He has requested that this overpayment be transferred to his account in the creditor's ledger. He knows that he is no longer a debtor. Why? Because it is not him that owes us now, but it is us that owe him, because now you have a credit balance. A credit balance simply means this is now a liability. A credit balance, it is a liability. We now owe this guy. So he now says, please transfer that balance to my creditor's ledger. So it is the same as we've always been seeing over the years, where you have two accounts. One is in the debtor's ledger, where on the debit is the plus, on the credit is the minus. And you have the creditor's ledger, where on the credit it is the plus, and on the debit it is the minus. And now you have a debtor with a credit balance, that 5,000 there. we must be able to transfer that 5,000 from the debtors ledger to the creditors ledger. This is a common adjustment. How do you go about this? You simply come, because you have a -5 and you need to take out the -5. So you come here, then you say plus 5,000. Now this is now equal to 0. And to complete double entry, you come to the opposite side on the creditors ledger and you say plus 5,000. The biggest temptation you're going to run into is to think that in one account you're going to say plus, in the other account you're going to say minus. Resist that temptation. Because if you're going to add, it has to be a plus and a plus. It will never be a plus and a minus. It has to be a plus as well as a plus. That is how we will do it. Okay. So I would then come and then I'll say, debtors ledger. Where is this? This is my debtors control. So I'm going to come to my trade and other receivables. And I'll say, what sign was it? What sign was it? That's a plus. That's a plus. So I'm coming here and I'm going to say, here, trade and other receivables, plus 5,000. Plus 5,000. And then where else do I go? I come here. Then I see in the creditors ledger, it is also a plus. Plus what? Plus 5,000. So I come to my trade and other payables and I say plus 5,000. Resist the temptation of doing this without opening the two-tier accounts. Always open the two-tier accounts. All right. All right, all right, all right. I'll check if I have some questions. Not as yet, Mr. Simbi. Mr. Simbi is my surname, not Mr. Simba. Not like Simba chips. No, no, no. Simbi, S-I-M-B-I. Okay, let's go. The provision for bad debts must be adjusted to 4% of the outstanding debtors. The provision for bad debts must be adjusted to 4% of the outstanding debtors. Okay. Good evening, sir. Why debtors ledger account and creditors ledger account sign should be the same? That's question number 1. Question number 2. Question, sir. Why did we add the 5,000 to receivables? Because we're supposed to pay them since they've overstated. Okay. Like I have said, you must be able to follow through. I'm going to explain it one more time. Lend me your ears at this moment. It begins like this. I'm going to tell the story again. One more time. Here we go. It begins in the debtors ledger, and I'm here. Here comes a debtor, and we sell the goods to a debtor. 20,000 DJ, 20,000 DJ. We sell the goods to a debtor, 20,000 DJ. It comes to the debit side. Our debtors ledger is going up. And then that debtor decides to pay us. When they pay us, it's CRJ. It decreases our debtors ledger, debtors control. So you come here and then you say minus 25. In this case, that debtor is overpaid. So you then say he was supposed to pay 20, but is paid 25. He is overpaid by 5,000. And if they have overpaid in a ledger, how does that look? You close a ledger with the side with the highest amount. So you look at the debit, you look at the credit, which side is the highest amount? 25,000. So you come here, you say 25,000 over here, 25,000 over here. Which side is less? The debit. Balance CD, 5,000. You guys have been doing accounting since grade 8. If your CD is there, that means your BD is down here. So your BD 5,000, if a debtor is overpaid, it means that that debtor now has a credit balance. Debit means a debtor owes us. Credit balance means that debtor is overpaid. We now owe that debtor. And everyone we owe is called a creditor. So we then come here and we have a credit balance in the debtor's ledger of 5,000 and we must take it out. A credit balance means it's a minus. Credit balance means minus. How do I take that amount out? You know, in accounting, you record it on the opposite side. So I come to the opposite side, which is the debit side. And the debit side has a sign. The debit side of your debtor's ledger, it is an asset, remember, debtor's control. It is an asset. So the debit side is a plus. So you come, then you say, plus 5,000 over there. And to complete double entry, remember, you're transferring it to the creditors ledger. The creditors ledger, it is a liability account. So on the credit side, it's going to be a plus over here. The debit side is a minus. So you see, it becomes a plus over here and a plus over there. Do not reason this question. Accountify it. Do not use reasoning. I must minus. Use accounting principles. So when you come here, you're looking at the signs. What sign is this? You're looking at the signs now. What sign is this? That's a plus. What sign is that? That's a plus. So you come here and you say plus 5,000. You go down plus 5,000. Do not bring emotions into it. Why are we adding when we are owing them? In order for you to take that credit balance out, you take it out by adding the 5,000. And it must be plus, plus. Do not be tempted, as I said earlier on, to subtract it in one of the places. It has to be minus. Minus in other questions, but in this one, it was a plus, plus. Next question then reads, next adjustment, it then reads, the provision for bad debts. Mutlali, if you have a question, Mutlali, please, if you have a question, send it to my other number. Mutlali, if you have a question, please send it to 070 750 4605. If you have a question, Mutlali, please send that question there and I'll be able to answer you. I'm afraid of opening this place. Last time I was called bold-headed. And it is true, but it was not nice. It was not nice. And okay, let's go. Next part then. The provision for bad debts must be adjusted to 4% of the outstanding debtors. So we will come and we will now say 735 plus 5,000, because we want to get the 4% of the outstanding debtors. You can see, so you're going to say 735, which is what we have here, plus the 5,000. It will give you 740,000. Then you now say times 4% of that. So you come and you now say 740,000 times 5%. All right. And then if you do that, it will give you 37,000. All right. If you do that, it will give you 37,000. But if you take your 735,000 and you get your provision for bad debts, all right? If you take your 735,000, which is this one here, and you say 735,000 times your 4%, you will now say, here's another option where you're going to come and say 735,000 times 4%. And then you're going to come up with a figure. So I'm coming here. I can see your messages. I'm coming to that. 735,000 times the 4%, and then you get your 735, and then 735 times 4%, and you're going to get your 29.4. Yeah, I get 29.4. Let me hear what you're saying before I can respond to you. Let me hear what you're saying before I can continue. Okay, no voice messages, guys. There are things that I'm doing, so then I can be able to. All right. 740 times 4%, 29.6. All right. Let's do it again. Let's do it again. 740,000, 740,000, 740,000 times 4%, and you get 29.6. Thank you. Thank you. Someone was saying, Mr. Simbi, your calculator is ready for bed. 29.6. Okay. And if you do this, I think you're going to get 29.4. Now, here is the question. Between these two methods, between A and B, you know one of them is wrong. You know one of them is wrong. The question is, which one is right and which one is wrong? The examiner deliberately brought the adjustments in this chronological order. Deliberately. That means first you had to adjust this 5,000 here. You had to adjust that 5,000 there first before you could do the provision. So if you said 735 times 4%, that will be wrong. That will be wrong. You have to say 735 plus the 5,000 to give you 740. Then you say the 740 times 4% to get 29.6. And when you get your 29.6, which is your provision for bad debts, you then come here and then you say minus 29.6. Thank you, guys. I think I got about 10 messages here that tells me that you guys are in class. Thank you so much. Let me give a special acknowledgement to the guys that responded. Jessica Manso, thank you so much. I can see you're following. I can see that you're following. I got a voice note. Guys, I can't listen to voice notes because I'm here in class with you. And then I have another one here that is a name that is just D. Thank you. You're following. And I have Karabo. Karabo, thank you. I see you got it there. Karabo, keep it up, my guy. And then I have a picture of the calculator here. And this is from Miss Birds. Miss Birds, thank you. I see you are following. I like that. Thank you so much. Thank you so much. Thank you so much. So we are on track. We are on track. The other way was going to be a bit longer way, but this would have been the shorter way. With this one, you would have had to go again and do another calculation where you get again 4% of the 5,000, 4% of the 5,000. That is true. But in other words, you'll be taking the longer route. You'll be taking the longer route. The other way that you could have done it would have been to say, if you come, you'd be saying 5,000 times the 4%. And then that would have given you 200. All right. And then you'd have said 2.4 plus the 200 at 29.4 plus the 200 to give you 29.6. You'd still be very correct. But the shortest way would have been to go with that way, where you just say 735 plus the 5,000. So the idea is you have to add the 5,000 so that you can get to the answer. Okay. In the statement of comprehensive income, if we were doing the statement of comprehensive income, that is where we would now say, how much was the last year's provision? All right, we then go look for last year's provision and see if it was given. Provision for bad debts for last year, it wasn't given. So you would therefore say last year's provision, then you get this year's provision, then you get the difference. And on that difference, you now say, if it's an increase, you record it as an expense. If it is a decrease, then you record it as income. In the income statement, statement of comprehensive income, that is where you record either an increase or a decrease. But in the statement of financial position, we record the to amount as it is. The to amount. The 29.4 is the to amount. So the to amount, we bring it as it is in the statement of financial position. Would come here and then would say 29.4 as it is. Okay, so it will come as it is there, 29.6. I'm going to continue. All right, and then we come to the next adjustment, and then it reads, commission income for February 6.4 was still outstanding. Now, the trick in this adjustment was, here we were given the statement of comprehensive income. And when you are given the statement of comprehensive income, everything that you have here is adjustment or is adjusted to the financial period. In other words, it has to do from the 1st of March 2024 until the 28th of February 2025. It is for the 12 months. So the moment you treat this as a trial balance amount, you are going to struggle. This is a statement of comprehensive income. So it then says, commission income for February 2025 6.4 was still outstanding. So if commission income is still outstanding, I would come to my trend of the receivables. Then I say plus 6.4. It is commission income that is still outstanding. Okay. We were recording in the statement of financial position. So commission income, this was my accrued income. So I'll bring it as 6.4 in there. The next adjustment reads, I'm going to create space so I can do my calculation here. The next adjustment, okay. In our next class, I'll make sure that my whiteboard is ready so that I can easily swap between the document and the whiteboard. I'll make sure of that. Okay, here we go. It says, rent for March and April was received and recorded. The rent was increased by 10% on the 1st of December. So the financial year begins on the 1st of March, 2024. And this financial year ends on the 28th of February, 2025. This is when it ends. And we've been told that rent for March and April. So we have here March and April. And the rent for March and April has been received and recorded. The rent was increased by 10% on 1 December. So from the 1st of December 2024, rent was increased until then. So we understand in this case that from here to there, rent was 100%. And it then increased by 10%. 110% over here. It therefore tells me that from the beginning, I'm going to do something wrong first, which your mind would tell you is the right way. I'm going to do something wrong first, and I'm going to tell you why it is wrong, and then I'm going to do the right thing. You're going to count here in terms of months, and you're going to say, from March here, March, April, May, June, July, August, September, October, November, because it is 1 December. So you're going to count there, and you're going to find that it is 9 months. So it's March, April, May, June, July, August, September, October, November. So for 9 months, rent was 100%. That is going to give you 900 over here. And then it increased to 110%. It increased for how many months? It increased from December, January, February, the year was supposed to end. Then you're going to say February, March, and April. So you're going to say 5 months there. So you're going to say 5 times 110, and that is going to give you 550. Because this is how you've always been doing this adjustment. And you now say 900 plus 550. And if you say 900 plus 550, that's going to give you 1,450. And you're going to now say, you want 2 months. Remember, I'm doing something wrong. Then I can tell you why it is wrong. Then you're going to say the 2 months that you want, which is these ones, you have 110. So you're going to say 2 times 110, and that's going to be 220. Then you're going to say 220 divided by 1450, and your mind is going to tell you to come and take that one, times 430,500. Now, if you do that, then you're going to come here and you're going to say 220 divide by 1450. And you're going to multiply by 430,500. This is how we've always been doing this adjustment. And you can see something is wrong here. Why? Because I told you I'm going to do something wrong. This is wrong. Where is it wrong? Because this amount is for 12 months. But this one that you gave me here is for 14 months. So they can't talk to each other because the rent amount is for 12 months. Yet these figures here is for 14 months. So it's not going to work. So the way you have to do it is to now say, for the 9 months, it was 100. So it becomes 900. But we are given an amount which I told you is for 12 months. So you only need to bring 3 because whatever you are given in the statement of comprehensive income is for 12 months. It has to be 12 there. So you then come and you now say, I don't want you to think I'm saying divide by 12 there. You're going to say 3 months now, multiply by the 110. And it's going to give you 330 like that. And you now say 900 plus 330. So let's come, calculator. It's going to be 900 plus the 330. And it's going to give you 1,230. 1,230. This is now for 12 months. If you add this 2, it gives you 12 months. That means you can now say this is now equal to the 430,500, 430,500 like that, equal to that. Now you come and you now say the months that you want, these 2 months, are 110 times 2. That's 220. What do you have? You have 1,230, and that is equal to the 430,500. And then you punch that in the calculator. All right, let's come here. Let's see if we can punch that in the calculator. And we'll now say what we want is 220 over 1230. And then we multiply that then by 430,500. And that is going to give us 77,000. Your biggest temptation is what you have always been doing, because this is not the amount in the trial balance. No, it is in the statement of comprehensive income. That's where the trick was. So 77,000 is the income received in advance. So if it is income received in advance, because they told us here that rent for March and April was received. So we need to go and record that in trade and other payables, plus 77,000 here. That was the trick. And then I'm going to do the next one. Similar adjustment. The trick was you were given the amount from the statement of comprehensive income, not the trial balance. This because they told you here that the following year-end adjustments were taken into consideration in preparation of the statement above. The company has two directors, so here's director number 1, here's director number 2. At the beginning of the financial year, they both earned the same monthly director's fees and were paid in full. You have to understand that in this session, there are several methods that we can use, but I'll try to stick to the simpler methods. A third director, Jack Gr12, was employed on the 1st of June from 1 June 2024, earning a monthly fee of 25% lower. So once we begin to hear the words higher, lower, it becomes much safer to go to 100%. Let's say 100%. So we had the first director, director number 1. The first director was getting 100% for 12 months. That's what it would mean. The second director, so this is first director, second director, director number 2, is also getting 100% for 12 months. Director number 3, which is the new guy now, a third director, Jack, was employed on the 1st of June, earning 25% lower. So it is now 100 minus 25. So this guy is now getting 75%. For how many months? From 1 June. So it's going to be June, July, August, September, October, November, December, January, February. The year was supposed to end on 9 months. But he was paid until 31 March. He was paid for 10 months. Okay, so in total, you then see that we have, for here, 34 months that were paid. Okay, and then you now say, let's see if we can do that. You now say that times that, that's 1,200. And that times that, that's 1,200. And you multiply 75 times 10 times 10. Here is again another way that you can make a mistake, as I was saying earlier on. If you work with 10 here, remember your amount that you're going to use here, which is the director's fees, is not for 12 months, but it is for 9 months. So if you continue on this, it's going to be again another wrong way. So the easiest way is don't go for the 10 months, already go for the 9 months. So you come here and then you say 75 times 9 months, because within this information is for the 9 months. So you then say 12 plus 12 plus 9. All right, 12 plus 12 plus 9, and then that will give you your 33 here. But let's continue. Then you're going to say 75 times 9. So you're going to say 75 times 9, and that's going to give you 675. So I come here, it's 675 here. Then you add this 2. So it's going to be 1.2 plus 1.2 plus 675. Let's see how much that is going to give us. Okay. So it's 1.2 plus 1.2 plus 675. You can see I'm trying to take it very, very slow. And it gives you 3,075. Now, The problem that you have is the 1 month, that 10th month. And this guy is getting 75. This guy is getting 75. So it's going to be 75 over 3075. And then we're going to say multiply that by your amount. How much is that amount for director's fees? 1,998,750, like that. Let's see how much it can give us. You now say 75 over 3075. 3075. You multiply that by 1,998,750. And then it will give you 48,750. 48,750. What is that 48,750? This is director's fees for March that have been paid in advance. So it's a prepaid expense. So you come to trade and other receivables, and then you say plus 48,000 plus 48,000. How much was that? 48,750. 48,750 plus 48,750. I'm going to go on to the next one. The next one then says fixed monthly repayment of 45,000. Fixed monthly repayment of 45,000. So I know there's fixed monthly repayments. So this has to do with the loan. It's 45,000 fixed monthly repayments. 45,000 times 12. So I'm coming here. It's going to be 45 times 12. That means it's 540. 540,000. Including interest has been made and correctly recorded for the financial year. The monthly repayments will remain the same until the loan is repaid in approximately 4 years' time. So they're trying to tell us there's still going to be a non-current part of the loan. Interest for the next financial year is expected to be 290,000. Okay, so when we come to our loan, we now say, if we look at the 540,000, these are fixed monthly repayments. And we are told the monthly repayments will remain the same, 45,000. So it tells us that in the next financial year, we are going to pay 540 again. But the way that 540 is going to be broken is going to be different now. Because we know the 540 is made up of A, interest. But in the next financial year, interest is going to be 290,000. That tells me, B, I can get my loan repayment in the next financial year. So I'm simply getting the difference between my 540 and the 290. So if I say 540 minus my 290,000, that tells me that I'm going to be paying in the next financial year 250,000 on the loan. In the next financial year. The examiner will not tell you to say, consider the short-term loan. No. The examiner would have said it in the words such as fixed monthly. The words fixed monthly, it simply means when we have paid our loan on the 28th of February 2025, we have to make another payment again on the 30th of March 2025. And we know that 30th of March 2025 is in the next financial year. Fixed monthly. So the moment I see the word fixed monthly, I know I'm being led towards short-term loan by the word fixed monthly. So it then tells me that this year we've already paid 540, which is interest and the loan. But in the next financial year, I am going to pay 250 on the loan. So I'm going to come here and I'm going to say, of the 3.2 that I am owing now, 250,000 will be paid within the next 12 months. So it therefore becomes my current portion of loan. It becomes my current portion of loan, 250,000. It is the same principle with the fixed deposit that we did earlier on, from non-current coming down to current. Okay, so this meeting was supposed to end at exactly 8, and it is 14 minutes to. Let me see if we can finish this. Otherwise, I don't know if the meeting will continue. Shares and dividends. The relevant entries have been recorded. The company had an authorized share of 9 million shares. So I can come here. They're talking shares. So I'm going back to my ordinary share capital note number 7. Then they say 750,000 new shares were issued on 1 March. So that's not at the beginning. So I have my beginning. I have my addition now. And my addition is 750,000 new shares. So I'm going to come here and say shares issued. And these shares have been issued at, we have not been told. It's still okay. Let's go. Then it says, an interim dividend was paid on 1 September 2024. Let's continue. 150,000 shares were repurchased. So we're coming now to the repurchase here. 150,000 shares were repurchased over here. And an EFT payment of 1,710,000 were made in favor of the shareholders. So this is my cash flow amount. My cash flow amount is the 1,710,000. That's my cash flow amount. So the directors declared the final dividend. I'm coming to you here. Just wait here. But here I don't know how much the repurchase is. So what I see here is my beginning, my addition, my repurchase, that is the bar. And then you have another B here. If you have such a situation and you are not given the amount, you have to look at the B closest to the R. Look at the B closest to the R. This is the B closest to the R. So you simply come here and you say that divided by this number of shares. You look at the B closest to the R. So you're going to come and say 2,750,000 there. So you're going to take your calculator and you're going to say now 17,875,000. And you're going to divide that by 2,750,000. And that is going to give you 6 Rand 50. So that 6 Rand 50 becomes the average price here at the end. And whatever is the average price at the end becomes the average price of the R that is closest to the B. So here it's going to be 6 Rand 50 here. Then you're going to say your 6 Rand 50 multiplied by 150,000. And that's going to give you 975,000. So you come here in bracket, that's going to be 975,000 here. Now I do the bottom up. It means I have my 1,787,000. Simbi, that's not 1 million. 17,875,000. I'm going up. I'm going to add the 975,000 plus 975,000 because I'm going up, minus the 11,395,000. 11,395,000. And that's going to give me 7,455,000. So I bring here my 7,455,000 there. So I can get this one as well. I'm going up. So I'm going to start. Remember, it's bottom up. So that's not a straight line, Mr. Simbi. So I'm going to start with my 2,750,000. So I say 2,750,000. Then I'm going to say plus the 150,000 shares. Then I'm going to say minus the 750,000 shares. And that's going to give me 2,150,000. 2,150,000 there. Then my note is finished as I've read this information. I'm racing behind time. I'm then told the directors declared a final dividend of 90 cents on the 2,750,000 shares. So I come here and I say, shareholders for dividends. I open my bracket and then I say, how many shares is it? 2,750,000 and 90 cents. If I do that, that is going to give me 2,750,000 shares. I multiply by 90 cents. 90 cents. And that's going to give me, did I punch that right? Yes, 2,475,000. 2,475,000 rands over there. This is for this one here. Let's see. Information H. I'm sorry, I'm now a bit faster. The assessment from SARS for the financial year ended indicated that company qualifies for a tax refund that goes to trade and other receivables. So I'm going to come to my receivables and I'm going to say plus how much? A refund of 70,000. I'll go to the next one because that is a refund. The net profit after tax was calculated as 4,721,000 for the financial year. Net profit after tax. And then we are told the financial indicators. All right. There are other ways that we could have used, but I'm going to try and keep it very simple. As I said earlier on, I like to keep things very, very simple. No need to complicate life. It is impossible enough already. So I'm going to close the bracket here so that we can get that one. All right. And then whatever we don't get, then we're going to come to these financial indicators. All right. And I'm going to try and just simplify it to the best of my ability. So I'm going to say 4,598,000. 4,598,000. 4,598,000 minus 13,260. And that is going to give me 4,584,750. 4,584,740. I close this one as well. I'm going to say 735,000. 735,000 plus 5,000 minus 29.6. You remember the famous 29.6 plus 6.4 plus 48,750 plus 70,000. And that's going to give us 835,550. 835,550 there. Now, I'm going to come here and we're now going to say trade in other payables. We're going to close this one. And it is going to be 878,500 plus the 5,000 plus the 77,000. And that is going to give me 960,500. 960,500. But I have bank overdraft here, which I don't know. That means the financial indicator, the first one comes into play now, the current ratio. The formula for the current ratio is, you have to know your financial indicators because there are certain financial indicators which can be tested in the statement of financial position and even at times I've seen in statement of comprehensive income. So the current ratio is current assets as to current liabilities. My current assets I was given over here, 5,798,000, 5,798,000. As to current liabilities, we don't know here. But the answer has to be 1.3 as to 1. So you're going to do cross multiplication. You're going to say that times that, that times that. And if you do that, you're going to find that it's going to be 5,798,000 as to 1.5 current liabilities. So again, you're going to divide everything by 1.5, divide by 1.5. So the trick is, the moment you find your financial indicator, your ratio is here, just draw a line there and divide already. Just divide here already. So in other words, you're coming to say your 5,798,000, 5,798,000, divide that by 1.3. All right, your 5,978,000, you divide that by 1.3, and that's going to give you 4,460,000. So you're coming here to say, on your current liabilities, you have your 5,798,000, and you're dividing it by 1.3, and that's going to give you 4,460,000. And then you come here and now say, how do you get this bank overdraft here? Simple. The 4,460,000, 4,460,000. Then you simply say minus 4,460,000 minus trade and other payables, which is 960,500, minus the current portion of loan, which is 250,000, minus the shareholders for dividends, which is 2,475,000. And that is going to give you 774,500. So I come here, then I get my 774,500. 774,500. And the next part now is to get my shareholders' equity. To get my shareholders' equity. All right. And then what we are given, we were given the net profit after tax, and they tell us it was accurately calculated to 4,721,700 for the financial year. And the financial indicator that we're given is the percentage return on average shareholders' equity. It is the percentage return on average shareholders' equity. Okay, so someone is saying, said the loan. Thank you so much. This is D saying, close the loan, Mr. Simbi. So we're going to close it, which is 3.2 minus 250. Thank you so much. That is your 2,950,000. Excellent. Excellent. Thank you. Beautiful. So we are now left with the retained income. But to get the retained income, we need to get our shareholders' equity first. We need to get our shareholders' equity first before we can get the retained income. Okay, so let's go and do that. And then let's create some space here. Okay. So what we are given is a financial indicator. And the financial indicator is your percentage return on average shareholders' equity. The percentage return on average shareholders' equity. I want to confirm if you guys can still hear me. Can you guys still hear me? Ma'am Helen, can you still hear me? Or you guys can react? Can you guys still hear me? Okay, thank you, thank you, thank you.
We can still hear you, sir.
Thank you, ma'am. All right. So we are given our, oh, thank you. Thank you. All right. Thank you so much, guys. Thank you so much for the reactions. So we want to do the last one, which is the percentage return on average shareholders' equity. And since we have time, because I don't think we're going to be able to do the cash flow statement today, so this is going to be our very last section. I am going to take chance, and I want to give one of you guys the chance to speak so that we are towards the end. I don't think anything can go wrong now. I want someone who can say, Mr. Simbi, this is how I would get that shareholders equity. And I'm going to take chance, and I'm going to mute microphone, but I'm going to allow one person, only one person who says, Mr. Simbi, I think I know how to get this shareholders equity. Remember, we are given the percentage return on average shareholders equity. So I want one person before we can call it a day that says, Mr. Simbi, I think I know. And then I'm going to unmute your microphone, and then you are going to get the chance to speak, because now this is the last few minutes of the session. After this, we're going to call it a day. All right. So I'm going to take the chance and unmute your microphones. All right. So if you want to respond, to this question, if you want to respond and you want to tell us before I can explain it, if you want to tell us, I think I've given you guys the chance. You can unmute your microphone and say, Mr. Simbi, I want to give it a try. Who wants to give it a try? Okay, unmute your microphone and speak. Let's see. Is there anyone who wants to give it a try before I go in? All right. Let me see if I can see here. Okay. Okay, I can hear you. I can hear you now. I can hear you. You want to give it a try? I can hear you. You want to give it a try? Okay. Okay, if you want to give it a try, you can just unmute your microphone and you can try before I can come in and conclude this part.
Sir.
Let's just
Okay,
answer.
sir.
I can hear you. Continue.
So, sir, I think we are gonna take this 24% percentage return on average shareholders' equity and equate it to the formula for average return on shareholders' equity. And since
Okay.
we have our
What
net
is the
profit,
formula? What is the formula?
it's net profit over 1/2 shareholders' equity
Okay. So
times
what net
100.
profit is it? Is it net profit before tax or net profit after tax?
Net profit after tax.
So you're saying it's net profit after tax and then over?
And then over 1/2 shareholders' equity
1/2 shareholders equity.
times 100.
Shareholders equity and then times 100/1. Okay, I'm following now.
Yes, sir.
I'm following. And
And
then,
then we will equate this formula to the 24% that has been given to us.
okay, so it is equal to 24%.
Yes. And then we are gonna substitute the 4,721,700 on the numerator.
Okay, so I'm gonna come here. Here, I'm now gonna put my 4,721,700.
And then we solve for the unknown.
We solve for this unknown here.
Yes, sir. Yes. So we are going to divide both sides by, let me see. Okay, we are going to multiply the numerator by 100.
Okay. Like this.
Yes, sir. And you can just remove the times 100 over 1.
All right.
And then after this, we are going to cross multiply. So it's going to be 1 over 2x multiplied by the 24%.
Okay. So it's going to be 1 over 2.
24%.
So
1 over 2x.
Do you want me to write it down here or I'm continuing up here?
Please write it down.
Okay. So it's 1 over, say it again.
1 over 2x 24%.
Times 24%.
Yes, sir. But can we have the x on the numerator, please?
Okay. So it's going to be what? 1x, is that what you want?
Yes, sir.
Okay.
And that is equal to 4,721,700 multiplied by 100. Can you remove the x on the denominator?
I'll do that.
And then after this, we multiply the x on the numerator by 24%. So you're going to have 24% x.
So I'm going to have 24% x.
Over 2.
Okay, let me bring it here. So it's going to be
you can just write 12% x.
Okay, so you've already divided by 2. I get you.
Yes, sir.
12% x.
And then we are going to divide the for the product of the 4,721,700 by 12%.
This one here by 12%.
Yes, sir. Yes.
And then that gives you?
That gives me, I think I was not supposed to include, because now I'm getting a very huge number. I think I was not supposed to include the percent in 24 since I already included 100. So can you erase the percent parts?
Okay, let's do that.
So it's going to be the product of the 4 million and the 100 divided by 12. So you get 39 million.
39 million.
Oh, I'm giving you the final answer. Sorry, sir.
It's fine. 39
so this
million.
Is 39,347,500.
500. And then?
And that is the final answer. I've already divided by the 12. Sorry.
Okay.
Sir, can I please try?
So the 39,347,000, you're saying this is what I bring here?
Yes, sir. That is the value of the shareholders' equity. I don't know if I'm correct or
39,347,500. Thank you for taking the opportunity to give this a try. Let me give ahead another voice also saying, say, can I try? You can go ahead.
So, sir, I equated the 24% with the formula of the shareholders' equity.
Okay, so you want me to redo this thing again?
Yes, please.
Okay, let's redo it again. Let's redo this.
So, sir, since we don't have 2 years, we're only calculating for only 1 year. We can't put average shareholders' equity as our denominator. Therefore, we're going to write net profit after tax divided by shareholders' equity.
Okay, so you're saying net profit after tax divided by shareholders' equity. Okay.
Yes, then you say equals to 24%.
So am I to say times 100 also?
No,
I mustn't say times 100.
no.
Okay. Is that not part of the formula?
Then you
Okay.
equate
So you're
with
saying
24%.
okay.
Then, since we know that our 24% is 24 divided by 100, we can just write it as a decimal number.
Okay. What do I say?
You substitute first the net profit after tax, which is 4,721,700.
Okay, let me just do it over here. So it is your 4,721,700.
Then you remove the 24% and write it as 0.24.
And okay, guys, check your microphones, please. 0.24.
Then you can cross multiply.
All right. Show me how do I do that?
Then you will say 0.24 times shareholders' equity.
0.24 times shareholders'
equity is equals to 4,721,700.
Okay.
Then you divide both sides by 0.24.
You divide both sides by 0.24.
Then our final answer for shareholders' equity is 19,673,750.
19 million?
673,750.
Say it again.
750.
750. Okay.
Yes. That's my final answer.
That's your final answer. Okay, so we have another one.
So can I also try?
Okay, you're welcome. You're welcome.
So
Okay.
I also went back
let me write this 19,673,750. Let me write this one here also. We are towards the end. We give everyone an opportunity.
So I went back to the original equation that we've been talking about. Net profit after tax over half
Net
average
profit after tax over
1/2.
1/2.
And then I just said a bracket 2024 plus 2025. That represents
2024 plus 2025.
Yes, sir.
And
then I then closed my bracket. And then I equated it to 24 over 100.
Okay, like this.
Yes, sir. And then I substituted my net profit after tax.
And then
which was 4,721,700.
4,721,700.
Yes. And then I multiplied the 4,700,000. No, I first started by dividing the 4,721,700 with the 1/2 to just get rid of the 1/2.
Okay.
And then it then gave me on the denominator 9,443,400.
On the denominator.
Yes, sir.
Okay. Okay, tell me how you want me to write it. So you are saying you take the 4,721,700.
Yes, sir. And then I just
And then,
divided by this 1/2 because it's
okay.
outside the bracket.
And
And
then you
then it
divide
then,
by 1/2 like this.
yes, sir.
And then
It gave me a denominator of 9 million,
a denominator or a numerator?
a
The top
numerator, sorry, numerator of
of how
9
much?
million, 9
Mm-hmm.
million 443 400.
443,
400, sir.
400. Okay.
And then, sir, now I have that numerator, and then on the denominator, I don't have the 1/2, right,
Mm-hmm.
anymore. So then I said 9,443,400 multiplied by 100. So I cross multiplied.
Mm-hmm.
Multiplied by 100. And then I also equated that to I said 24. I said equals to, then I said 24.
Mm-hmm.
And then I did a bracket.
Okay.
Inside my bracket, I have 2024 and 2025.
2024 and 2025. Uh-huh.
Yes. And then, do you want the value for that 9,443,400
Yeah,
times
give it to
100?
me. Give it to me.
It's 94 million.
Mm-hmm.
It's 94,434 zero 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 4 zeros.
Uh-huh.
And then it's obviously equals to 24, 2024 and 2025.
Okay.
And then I got rid of the 24 by dividing by it 2.
Yeah.
Yes, sir.
Uh-huh.
And then I got a value of 39,000, 39,347,500.
At 9,347,000.
500.
So we were here before, earlier on. You remember that?
Okay, yes, sir, we were.
Mm-hmm.
Sir? Hello? Sir? So, and then I went back to the information that I was given at extract A, and then I took that 16,200,000.
Say your mic is off, Menier.
Am I audible? That is
Can I ask a question for the person who was answering the question that I asked?
okay.
Can you hear me now, guys? Can you guys hear me? Can you hear me? Okay, if you can hear me, please react. React if you can hear me. Okay. Thank you. Tell me if you can hear me. Yes, you can hear me. Okay. You know what happens when you try to be kind and to be polite. I thought, you know what, let's bring everyone into class, but yeah, it never works. Now you understand why we have to mute everyone, because now I got muted. All right, let's go. At least no one called me bald-headed this time. So thank you so much for this breakdown. But there are other ways of trying to break it down. But thank you so much. And I like the way you were doing the 24 and the 2025. You make it very, very simple here. And the way you took away the 1/2 here, and then you come to your 9 million 443, 400, then you multiply by the 100 and you get that one, and you get rid of the 24 until you get your 39,347,500. So that is your 2024. The 39,347,500 is your 2024 and your 2025. So when you're coming to your answer now, you're going to say your 39,349,500 is your 2024, 2025. That amount is for your 2024, 2025. All right. So this amount is for your 2024, 2025. As she was explaining, she said this is 2024 plus 2025. So if we can get one of these two, so she said, let's go back again to our information A, where we get the 2024, which is 16.2. So you come here, then you say minus 16.2 million. So our first presenter got it right until this figure here, but then did not come to take out the 16.2 million there. So if you take the 16.2 million, you now come and you now say your 39,349,500, and you say minus 16.2 million. And then that would give you your final answer, which I want to believe is 23 million. Okay, did I punch in something wrong here? So it's 39,347,500. 39,347,500. Let's punch it again. 39,347,500. Is that correct? 39,347,500. Let's see again. 39,347,500. 39,347,500, which is what you see here. Okay, 39,347,500. And you subtract, because this is 2024, 2025. Then you subtract your 2024, which is 16.2 million. And then that will give you 23,147,500. So you end up with 23,147,500. And to get your retained income, you then come and you say your 23,147,500 minus the 17,875,000, like that. Then you say minus 17,875,000, like that. And then you end up with 5,272,500. Financial indicators. You have to understand that certain financial indicators can be used in the completion of your statement of financial position, as we saw here, where they used the percentage return on average shareholders' equity. So here it was the average shareholders' equity. That means here to have the 2024 plus the 2025, and then you get the average by multiplying by 1/2. Some would have multiplied by 0.5. So I would advise, as we are going, continue practicing questions such as these. But what we're going to do, you are going to be informed of when our next class is. Our next class is. I will speak to the managers that are here. I want to acknowledge on the platform, we have Mem Helen, who is the Johannesburg North subject specialist. And I also saw on the platform the provincial coordinator, Beauty Mpanza. She's also here. So I will speak to them. Then we'll see when can we have the next class so that we can support you guys better. So we're going to see when we can have another one. We cannot continue now, as it is now time for me to go feed my dogs. They have not eaten. So I must go and give them a bit of soup and their supper for tonight. So guys, thank you so much for coming in tonight's class. I am happy to have seen you in class, and I'm just going to give the two managers that are here the chance to say a few words before we can call it a night. I see House Beauty is here. House Beauty, if you can just react so that I can unmute your microphone. And Ma'am Helen, I have also unmuted your microphone. I've unmuted Ma'am Helen's microphone, and I've also unmuted House Beauty's microphone. Please, you may speak to the kids if you have something. And if you would want to tell them when we might have another lesson, I am at your disposal. I will run as you direct me.
Thank you so much, Mr. Simbi. That was excellent. You know, I've been sitting here and also doing the calculations. And I just want to say thank you very much for the learners. At some point, they were like dwindling, but I see they back to 99. And it's just a pity that I didn't do the register, but I'll do the register the next time. I just want to say thank you, learners. And I appreciate the freedom to ask questions and also to attempt, because that's the way how we learn, by making mistakes. Thank you very much, sir. And thank you also to Beauty for joining us. Thank you for the support, Beauty. We much appreciate it. Thank you, learners.
Ma'am Beauty?
So just before Ma'am Beauty comes in, I just wanted to say that seeing that we're writing on Friday, I would think that Wednesday would be actually appropriate. I wouldn't want to keep them up on Thursday. If it's possible to have another session on Wednesday so that they can practice Thursday. If
Okay.
it's possible.
Yes, I think we can plan around that, and then we can see how best we can assist them. Then we send out communication. Where there's a will, there's a way. I don't think anything can stand in our way. We can always find a way to assist them.
Yes, thank you so much, sir. Because this is actually where we're having a challenge. The paper 2 is not so much of a challenge, but paper 1 is a challenge for us.
That's true, ma'am.
Thank you, sir.
Ma'am Beauty, did I unmute the right microphone?
I don't think so, sir. It's BM.
Oh, it's BM. Okay. I saw one that was saying Beauty. I don't see the BM. I don't see it. Ma'am Beauty, can you react so that I can be able to see you? I see Beauty here. Okay. Beauty Buns, I see that one. Okay, I see you now. Okay, you can speak, Ma'am Beauty. Ma'am Beauty, your microphone is ready.
No, I think it's the network also. I was just struggling. It was great. But thank you so much, Helen, for organizing this session. Really, I was very worried when Simbi shared the information with me to say that you are doing 2025 paper, because I know that it was a very steep, paper. But for the learners who are sitting in this, a platform, please don't hesitate and say, accounting is very difficult. Yeah, this is one of the most difficult, papers that we have ever seen in the system. So this paper, hopefully, it is not going to drive you away from the subject. It is not going to despair you from the subject also. I think you will continue with the subject, go back and practice. And I was happy to see you, doing the calculations that were very, very hard for learners, to get correct last year. And that demonstrates, strength in you. Simbi, thank you so much for unpacking this question paper also. Hopefully, maybe there will be a recording. I'll be very happy if this can be shared through Helen with other districts also. I think this will benefit everybody in the province. And thank you so much for the sessions that are to come. Yeah, I really enjoyed and I have learned so much from you, the young ones. Yeah, you're quite clever. I was just very impressed, really. You nailed the calculations. Yeah, you're doing very well. We're expecting 100% from most of you who have attended this session. Your friends who ran away, because I know the numbers were 120 something. As soon as Simbi started with this calculation, I could see numbers dropping down. Yeah, they should always stick around. This is one of the most difficult calculations, but when you get to other papers, I promise you, you are not going to get anything that is so challenging. But thank you so much for all the attempts. Thanks, Helen. And everybody, good night. And thank you for dedication. I mean, it's 9 already, and you guys are still sitting here. And I just want to wish you all the best for your June examination. But I think your June exam might be much better, than this paper. Thank you so much, guys. Thanks. Thank
Thank
you,
you, ma'am.
Beauty.
Thank you, ma'am Beauty. Thank you, ma'am Helen. I just want
Thank
to
you,
give
Mr.
a shout
Simbi.
out to Catreo Jessica Manso from Phoenix High School. You also nailed the calculation. I received a number of calculations on my inbox here. You guys rock. Mr. Simbi is super, super proud of you. And I know you guys are calculating. Those calculators are working off the chat. And please enjoy your evening. Remember, whatever you learned tonight, if you don't put it to practice, it will
Gonna lose
just
it.
disappear, because
Yes.
accounting stays in the fingertips. Whatever you learned tonight, make sure you redo it again and again and do something different, similar to what you have learned. That is the only way to keep accounting at your fingertips. Until next time, guys, have a blessed night. May you dream of accounting,
No,
and
sir.
all the best for your English tomorrow.
Thank you. Thank you, sir.
Thank you
Thank
so
you,
much.
learners. And thank you, Beauty.
Thanks, Helen, and everybody in the platform, including Simbi. Thank you, guys.
We
Thank
try
you.
to
Good
do the
night.
most difficult ones.
This was the most difficult, but
Yeah.
man, they are very strong, these guys. Yeah, keep it up, guys. Keep practicing, eh? Thanks, Helen. Simbi,
Good night.
I'm
Good night.
out.
Thank
Good
you.
Good
night.
night,
Good
everyone.
night.